As to be expected, the markets crashed with the news of President Barack Obama's signing to raise the debt ceiling. This shows that the markets are not reacting well, and investors are not confident in the stability of capitalism. Here's a sample of the reaction. U.S. Dow Jones Industrial Average down 4.3%. This is the largest since the 2008 global economic collapse. The Nasdaq is down 5.08%. The S&P 500 index is down 4.78%. Now, a lot of people don't know what this means because they don't know how to read financial data. Now, what this means is investors have no confidence in the market to make money, so they pull their money out and hoard it as opposed to investing it. Now, investing money in capitalism is the only way to recover from a decrease like this. They're not confident in its ability to make money, so they draw the money out and not invest it, which is what they're supposed to do in order to repair things. There are countries in Europe on the verge of bankruptcy, and some of them going into bankruptcy. Now, this means the people will not have money, which means they will not be able to purchase money. Now, this lack of ability to purchase commodities or spend money in general means investors will not have an incentive or feel confident enough to invest money. Now, when investors refuse to invest money, it's because they're afraid they won't make a profit. If people don't invest in those countries, then they're going to have a recession. You have to invest in order to fix things, but you won't invest unless you're sure you can make a profit. Meaning, this is a self-fulfilling prophecy when money is withdrawn from the circuit of capital. This has always been one of the absurdities of capitalism and markets to me. The market is more affected by what people think of it as opposed to what it actually does. If an economic plan does well, but the perception is that it won't work, the market reacts poorly. If a plan is unstable, unpredictable, but the people feel like it will work, the market reacts well. It's more important what people perceive the market will do as opposed to what it actually does. It's more important that people believe the market will work rather than it actually working. Now, it's kind of like religion. If people believe that they are saved and believe that God loves them, then they are going to feel like they are saved and that they are loved. If they don't think God loves them and they don't feel that they're saved, then they're going to feel that they're not loved and they're not saved. The idea is that God loves everyone all the time, but this perception is more important than what is fact. The market is a lot like the love of God. It's only there if you believe in it, regardless of the actual situation. But I want to know what you think. Do you think we're headed for a second dip in the recession? And in another question, is the market like a religion? If we just stop believing in it, it will just go away? Let me know what you think in the comment section below.